Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 6th of February 2016 and we're producing the fourth of our subscriber videos. And it's by Kabir and his article is entitled, "Will India's love for gold and silver slow down her economy?" For those new to this channel, we have subscribers who sign up to our website at www.illuminatisilver.com. And one of the offers we have given our free members is that we will, where we can, produce a video for them on a precious metal or finance-related topic, providing they provide the text. This is the fourth in what we hope will prove to become a most popular series. This is what Kabir has to say. India is set to become the fastest growing major economy as per the recent report by the World Bank. According to the report, India's gross domestic product or GDP is expected to grow by about 7.5% in 2016. The growth of India's economy is attributed to a combination of factors, including RBI's inflation focus, supported by benign world commodity prices and strong government reforms. In spite of the projected growth, the economy of India may get affected by the ever-growing demand for gold and silver by its citizens. How does the demand for gold and silver by its citizens affect the Indian economy? Well, here are the facts. Gold is an important aspect of the Indian people. On the global level, India is the largest consumer of gold and accounts for more than 30% of the world's gold market. However, there is a catch. India does not produce enough gold to satisfy her demand, and as a result, the country must import gold to meet the demands of its domestic customers or consumers. Gold is universally accepted and considered a safe investment, even in the face of political and economic turmoil. The metal is considered such a solid investment that even traders involved in commodities trading invest in gold bullion. These investments are determined by prevailing gold rates in the economy at the time. Though gold is a sound investment, it does not add much value to the Indian economy. Currently, it is estimated that Indian households possess more than 20,000 tons of gold, compared to less than 600 tons held by the government. To entice the Indian people to turn in some of their gold for interest-bearing bonds, the government has come up with a gold monetization scheme. However, even this bright idea has met a lot of resistance from its citizens. Most of the gold purchased by Indians is used as jewellery. Though a few people buy gold with investment in mind, most Indians still prefer the conventional way of holding this precious metal in its physical form. This perception was evident when India initially introduced gold ETFs in 2007, and most citizens showed little enthusiasm over it. With time, investment in gold ETFs started gaining some momentum. Silver, on the other hand, is used as a precious metal as well as for industrial purposes. Globally, silver is primarily traded for industrial purposes. However, in India, it is imported largely for silverware and jewellery. The country is among the 5 top consumers of silver in the world. About 60% of silver imported in India is consumed in the rural areas, where rural population view it as a solid savings commodity. Though India consumes a lot of silver, it does not produce a significant amount of the metal to satisfy its needs. This means that most of the silver, just like gold, has to be imported. With prices of silver having dropped by 18.5% in 2015, the demand for the white metal has gone up. More people, especially from rural areas, are changing from gold to silver amid the white metal's declining rates. Gold and silver are sold in the international market, mostly in US dollars. To meet the domestic demand, importers need funds in dollars. To get the required dollar amount needed to buy this precious metal, they have to sell rupees to banks and buy dollars. All things remaining constant, the transaction, selling rupees to buy dollars, tends to decrease the value of the rupee in the foreign exchange market. The decreased value of rupee is not necessarily bad, as it helps exporters. On the flip side, it makes imports priced in dollars quite expensive. The Indian economy relies more on imports compared to exports. The greater the amount of imported commodities, the more the country's trade deficit, that is, a gap between imports and exports, increases and ultimately raises inflation. Gold and silver contributes to a significant proportion of this gap because the volume of these imports are so high. As explained earlier, gold and most of silver bought by the Indian people is not ploughed back into the economy as investment. Rather than invest, Indians stockpile these precious metals as jewellery and silverware. They end up holding piles of gold and silver as a hedge against bad times. These assets are used or sold as collateral with a local moneylender when the need for money arises. Indians are highly determined to acquire gold and to a lesser extent silver by all means. They are so keen on possessing these metals that they would rather sacrifice their country's economy and currency in the bargain. By buying up billions of dollars worth of foreign gold and silver, Indians are sending their cash overseas and disrupting the balance of money entering and leaving their country. This has the effect of driving down the value of the rupee. For the Indian economy, the gold obsession is worse than a poor investment. Compared to purchasing bonds and stocks, parking money in gold slows down the country's economic growth rather than stimulating it. At the same time, a growing trade deficit has been forcing the country to devalue its currency at about 10% annually for the last 2 decades. These plunging values scare people out of rupees and foreign funds out of India. This in turn translates into less investment and slower growth, which weakens the rupee further. It is a given fact that over the last decade, gold has given returns which no other asset class has been able to match. However, the demand for gold among Indians has always been price independent. The effect of high prices has been minimal on the volume of gold imported, and low prices may increase the demand in the coming days. Here, the important issue to note is that it is the economies of Europe and the US that play a major role in determining the price movements of gold. By importing gold and silver, Indians are investing in the international markets and helping other economies to grow while slowing down India's economy. In spite of the factors stipulated that may slow down India's economy, Moody's Investors Service and the International Monetary Fund forecast that India is on course for a 7.5% growth rate in 2016. These institutions claim that the growth will be due to better investor confidence, improved policy reforms and lower food prices. Meanwhile, the jury is still out on whether India's love for gold and silver will slow down the country's economy. End of article. So what are your thoughts about Kabir's comments? Do you agree with him that the import of gold and silver is detrimental to India's economy? If so, or not, we would appreciate your opinion. Our view is that the Indian people have for centuries worshipped the ownership of gold and to a lesser extent silver. They see them as precious and of value throughout time. We have already witnessed the tiny take-up of government schemes encouraging the use of paper gold and suspect that the Indian people's attitude will remain little changed. As we wish our subscribers to express their views freely and without fear, all that we ask is that whether you agree or disagree with Kabir, that you express your opinions in a constructive and non-offensive way. We hope to hear your views and wish to thank Kabir for his contribution. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/IlluminatiSilver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.